Right, welcome to the blog for Wednesday, the 5th of September. This is day 63 of 65 of the Compound Effect Challenge. Getting very close to the end, but of course, it's all about making forward progress every single day, applying my engine method, and make sure I'm doing the little things day in, day out. It's the little things that are quite simple to let them go by, but if you make a deliberate focus to make sure you do them every day, for example, doing this blog every day is just a part of that. One part of making sure I'm doing all the little things right, which all add up to giving me forward momentum and helping me progress with my trading. Amongst other things, it's about filling in my spreadsheets, filling in my trading journal, doing things at the end of the week. So doing my weekly wrap up, my monthly wrap up, filling in my results sheets. There's a whole process. It's all very much becomes a habit, and by doing them day in, day out, and really focusing on them for the last 63 days, it really helps in moving forward. So that's what this is all about. So as far as the trading method goes, so this talks about the setups. I've just recently done a blog which will be posted on I think the day before today, so it's there now. It's all about the exit strategy. So a big part of my trading system, the entire trading model or trading plan is, it's broken down into many different parts, but just two parts of it is the entries and then the exits. So, as I speak about it in that, exits need to become as much or if not more of a priority and a focus. So for that reason, now that I've established a bit about my exit strategies, want to really chat about them as in these blogs as well. So talk about the entry and the exit, and for me, that helps me focus and make sure I'm focusing on the exits as well. So here we go. Today's an interesting day. Basically, it's kind of typical of what's happening in these overall markets, and that's that we're really sticking within a range. The market's having trouble of really finding a trend, but even though it's within a range, it goes to show it doesn't necessarily always need to be a trend to find good trading areas. Obviously, trends do help a little bit, but it's not everything in markets aren't always going to trend. That's for sure. But today was quite unusual, just the way that it just really just couldn't get going. Even on a small trend, really, a couple of times it looked like it was going to, but just never got there. As far as this is a 15-minute chart that I've got up here at the moment, and this sort of added in this line up here. It's not a key level or anything, but it just kind of shows that this market is in quite a decent channel at the moment. What I should do is actually I'll just change the color of that particular line just to show that it's not a key level or anything. It's just purely used as a bit like the trend line, just looking for a channel. Okay, so previously I've got trend lines in all sorts of different areas marked. So it's either trend lines or the most significant of the key levels in the market. So at the moment we've sort of, here's this previous trend line which haven't really come back and touched. Like it's going to be down here somewhere. So that's out of the way, and moving on from there, you can see there's no sort of trend line because there's no trend for it to really follow and pick up and create that trend line. So, but I still need sort of, as far as my exit strategies are concerned, key levels in the market that, and seeing what they're doing and reacting to those, and that provides a bit of an overall guide for me as far as what the market's doing direction wise and things like that. So 1396 is just a key support resistance area, and it's one of the most significant areas in the marketplace at the moment, so that's why I've got that mark there. And then I've just also added this top line here just to show that this market certainly is in a bit of a channel, and it'll be interesting to see one way or the other if it can break to the upside or the downside of this channel eventually, whether it be today, tomorrow, or a week away. So that's the medium term markets at the moment. As far as today is concerned, I've got some of these, these key levels are still marked here. It's quite amazing how many times it's basically this 1408 again, like yesterday's basically the top of the market, and the 1400 it twice showed to be the low of the market in between 1403. The market reacted quite a few times. There was a trading area around here where it reacted to underneath and above it, and then certainly reacted later on towards this area as well. So those key areas certainly having an influence on the market. You've got the breakout box drawn out here, so where basically a box around this pre-market data. So this is always the first trade of the day I look at, is a directional breakout, so you can see the markets come down. It tried to push through this box, but certainly not with any power. The other markets, which is a big influence in this area, weren't all pushing through with consistency here, so just it looked like there wasn't any momentum to go through. As a result, it's got a bounce. From there, it's come to the upside. The 5-minute chart doesn't show it as well. What I'll do is bring up the 1-minute chart in a sec, but basically we've made a little bit of a top here. We've come back. So what I've done, and it's sort of a slightly different way of approaching it, use that as a pivotal point, because what's happening is I used to look for the market to go back, break it, then come back and buy. But what happened is, if it's going to go, and quite often me just go, it just never came back. Or if it, and this particular one, sometimes it goes and then comes back, but many times it'll then push through it. So this particular one, if I had waited for it to break, I still would have been keen to sit here and buy, and it would eventually push through and stop me out. But what I did is gave myself a better chance by providing a pivotal point. So a top, it's a bit like how I approach my reversal directional trades. Look for a kind of a key level in the market, look for it to come back away from it. Then if it approaches it again with all the other markets pushing through and showing power, like it's got momentum to go through the area, buy right at this kind of pivot here as it breaks through it. Okay, so as it's breaking and all the markets are pushing through the breakout box, I'm already in the trade now. Okay, so this one ends up being a loss, and but overall the area for me was still really good. But I know if I had approached it my other way, my original way, I wouldn't even give my chance to get that 7-tick gain that originally went and then came back and stopped me out. I would have been actually waiting, and it just never would have went in my direction. It would have been stopped out straight away. So just find this a better way to approach it. So 1-minute chart, bring it up. So here it is here, this basic little point here, this market. So right there, just looking at that particular spot. So the market comes up, comes back from it. This is a strong green candle. All the other markets were breaking through, we're getting through it. Russell and a few things like that, we're already up here. So I had my order on to buy. It just popped back a tick or two, and then it went. Eventually it's gone 7 ticks. Not able to go on with it, and came back and ended up being a stop out. But in regards to this area, we're talking about exits now. Okay, so this particular trade here, there was a couple of ways to look at it. Obviously there's a key level which it's running into, which I knew that this was the top of the previous market, and knew that it certainly was some resistance. So originally I did start off with a strategy 1 exit, where I looked to get 5 ticks out, which of course would have easily got the 5 ticks out, and then potentially this would have been actually a break-even area. So that's the difference between that's why for one, exits are so important. A couple of different exit strategies, and I have to decide based on my systematic approach. I don't decide. The systematic approach tells me which way to go about it. So within the different strategies that I exit, there was different results that I could have got from it. But this particular one, even though there's a level here, I just saw price action was pushing through it really strong. It had some real momentum. Because it was the top previously, I thought, mate, if it broke this, it was potential to really go on. So for that reason, lifted it to a strategy 2 and prepared to let it go for the full all contracts at 10 ticks. In the end, it hasn't gone that way, but just based on everything I do in regards to my exit strategy, I was happy with the way I did it. In the end, it ended up being a loss rather than a break-even trade, but that's the way the system made the decision. So I'm fine with that, and it all works out in the long run. But just a really good point there as far as how important exits really are. From there, the market, after trying to push higher and giving it a good go, it then came back within the range and really started to get some momentum, and looked like, especially after the upside failing, it was going to push lower and head back to these lows. So it starts coming through this key level here. So for me, this is my way of looking at 5-minute trades, 5-minute buy, 5-minute fade, or I call it 5-minute continuation, 5-minute momentum. So as far as 5-minute fade was concerned, which never actually came up from a pure 5-minute trading perspective, but for me it came up, it pushed through this key level, come back, used as a resistance, and then push lower. So let me go to the 1-minute chart. There was a couple of things going on here. So here it is, it pushes through, so I've got at least 6 to 8 ticks. So for me, if it's quite a bit of momentum, 6 ticks is enough. So there's momentum there. Put the order on. Here, it picks up the order here, went 2 ticks, and then went against me. Thing about this area, and quite often it is the case, it can be interpreted a couple of ways. For me, it's very black and white, and I do follow the system, so I'm fine with the outcome. But around this key level being a key level, it's either going to be an area that holds as support or acts as resistance. In this particular case, the level played out really well, but it actually ended up being a support level. So rather than holding resistance, it got back through it, came back. I'll go to the 1 minute chart again. So it got through it, came back, used it as support here, tried to use it as support again here, and then it's pushed higher from. So yeah, there's 2 different ways to interpret it. So back to the 5 minute charts for a second. It's either seeing this as a new trend, look for it to come back. You can see the moving averages starting to point down. Use it as a pullback and then push lower, or look at it as more as this is a trend. This is just a pullback before getting a continuation of trend. So that's a version of the 5 minute buy. So right in this area for me, there was a 5 minute sell, or sorry, 5 minute fade, which is my momentum trade, or then there was a 5 minute buy situation, which is my 5 minute continuation trade. And that's why I've got the little arrow there. And just as a side note, this moving average 20, I just want to make the point. For me, I place direction based on this moving average 20 line. I think it's, as far as an indicator and keeping it very simple and very black and white, it's probably one of the, I just can't find anything that does a better job as far as providing direction. So when it's pointing down, I'm selling. When it's pointing up, I'm buying. So when we're dealing with these key levels, I buy or sell off it according to that direction of that line. So here it's pushed through it. As we're coming back and use it as resistance, you can see moving average still clearly pointing down. So I'm looking at it as a sell. It's then popped up back above it. Okay, so if we didn't get all the way through, if we say I only got 4 ticks through it, so for me I need momentum through it, say if it only just got through it, then started popping up, it needs to go back through it the other side by 4 ticks, then use it as support, I would have been buying at this level here, but obviously I'm just getting out of the previous trade, so I'm not going to straight away, a minute or 2 later, buy here. But then it became obvious it was holding support more than 10 minutes later, because I need to wait 10 minutes between trades, unless it's a reversal trade. It's then, I'm getting a continuation trade, so therefore I've got the arrow here. I'll show you on the 1 minute trade. So like I said, 1 minute chart, it's tried to come back here, and I actually had the order on here to buy. So I got stopped here, 10 minutes later I got the order on here to buy. It's just come within 1 tick before then going higher. So this particular area, again, it would have been an exit 2 strategy, like I said in that particular blog. Most of the time I'm going for an exit 2 strategy where just looking to get everything out at 10 ticks. I do that more than 50% of the time. So in the end, again, I'm happy with the process. It's very much systematic, black and white. It's pointing down and then pretty quickly switch the upside. Overall these areas are going to work themselves out, and I know it does well over the long run. But this particular one is just a case of just getting stopped out and then just missing the winner. And it was quite a real mesh between a couple of different trading setups there. But it's very clear the moving average is pointing down, then quickly started pointing up. It proves to me that how well this moving average 20, how good of a job it does, and how well these key levels in the marketplace work. I just came off second best in this particular area, but more times than not it works out really quite well. So hopefully that makes sense. But overall, a momentum trade which ended up being a loss, continuation trade which worked but couldn't take it because it's straight after the loss, then gave me an opportunity to get in later, and that's been missed by 1 tick before going higher. We then very much came into this sideways range, got a reversal signal here. So basically the reversal signal is where it's like the directional trade. I'm looking to pick up on a new direction really quite quickly. So here's the pivotal point right here. Okay, the market's tried to go higher from that, and if it fails to go higher and starts breaking back through this point, well, that signals change momentum, and that the market's if an area where it should go higher all of a sudden fails and starts breaking down, I like that even more as far as a downside. If it fails to go somewhere and then starts going in the opposite direction, for me that's why it's one of my favorite trading areas. It just, to me, says that there's momentum and a real power there. It's a great way to trade the markets, based on my style, my personality. But of course, many times it might do a bit of a fake move where it just pops down and then goes back up. So to try and eradicate that, I'm always using other markets. So I want to see all the other markets pushing through. Okay, so it was right here. So just before it broke the pivot, the ES all of a sudden started to get some momentum. It would come in at lunch. All the other markets are breaking down. So sometimes I'm getting on a little bit before the pivot, but if I'm, quite sure it's going to eventually break, I'm prepared to get in early. So eventually it has. You can see it has bounced. I was a little bit hesitant as to whether it was going to eventually hold. It looked like it was getting a bit of a, maybe I thought I went in a bit early, but then eventually it's come back and it's broke down, and this move came, which was it's very much a predictable area when you look back over in hindsight. I'm looking for the buyers. They try to go higher, they failed, all their markets breaking down. Logic to me says it's going down, and that's exactly what happened. Exit strategy, I applied exit 1, caution. Obviously there's a key level in the marketplace here. It was still quite in a tight range as well, coming outside lunch. I just wasn't sure how much power I was going to have. So the entry says definitely potential to head down for a bit. Exit strategy says act with caution. So I'm getting out 5 ticks here, because as soon as it goes 5 ticks, it's hitting a key level again. And previously I saw this level work really well. So for that reason, definitely want to be active caution. Took the 5 ticks out here, then let the rest go for 10 ticks. So overall ends up being about an 8.5 tick trade. But obviously it's gone through and gone to the next level. But at the time, I very much just needed to act with caution. So that's the reason why I used exit number 1 there. So, and then as far as the rest of the day, not a lot really happened then. For me, I was looking at some sort of continuation trade down here. So a 5-minute sell. So need for the market to come through. So this particular area here. Once the market pushes through 4 ticks, I need to come back, use this as resistance, push down lower, but just kept on going through. By the time it came back, moving over, just starting to point to the upside, so I need to let that area go. If I want to push through and then come back and bounce, so very similar to what I was looking at over here. I've got my very much blueprints of what I'm looking for based around this area here, but none of them panned out. It's very precise to the tick as to what I need to do, but nothing. There was potential, but nothing actually set up in this area. So just the 3 trades, 2 losses and a winner. But again, because it's 2-to-1 ratios, ended up being, although because this was one where I took out some contracts early and then 2 full stop outs, ended up being ticked down for the day. But from an overall sense, again, it's most of my trades, when I look back over the averages, the winners are more than 2-to-1. So the winners are more than twice the size of losses. I've noticed, I spoke about this previous day, that through August, time which was low volume and lack of movement, a lot of situations where I had 2 or 3 times more losses than my winners in a week, yet was still managed to get break-even weeks or even weeks that were slightly up. So that's just confirmation that for me, that the 2-to-1 ratio just works well for me. And again, it comes back to you trading your style, trading your personality. So that's a wrap up for Wednesday. Back Thursday.